What is the most common source of capital that investors forget to look up, Paul? Let's start with you.
Yeah, it's interesting because we've been having the same conversation and the answer really is almost the same, 10 years later, 15 years later, Greg, right?
Mm-hmm.
But it's the same question. Okay, well, where do I start first? Where do I go first? Right. And that's what we've been doing, Greg, and your team's been doing. Passive Income Club at Fortune Builders has been doing for 15 years is step one is do that diagnosis. Okay, where is your capital currently? And the first thing we really go to is what are your retirement accounts doing? Right. And that's the number one. So that's the short answer to your question, Pablo, is retirement accounts is the number one thing. And I said it again last night over a couple of drinks with some of my buddies here, and they were blown away. They were like, wait, no, you can't use your retirement account to invest in real estate. That doesn't work. Right. And that's the normal standard answer is, well, how do you do that? That's illegal, isn't it? Right. And they have no idea that if you make some strategic moves, right? Namely, we can talk about it, Greg. I don't want to steal too much thunder, but we do have to self-direct some retirement accounts, but there's some specific sources, specifically older employer retirement accounts. So some older 401ks and IRAs. So those are two that people have no idea that they can self-direct. And we can talk a little bit about how to do that, how that works. And then you can invest in real estate. You can invest in commercial property. You can do hard money lending. It's a huge source of capital that most Americans and specifically most investors don't know they can access, right?
JC, you've been on the front lines more than usual lately, right? You host the show. You've been doing a lot of outreach these days. Even right now, in your most recent experience, where does the conversation tend to go as far as like, I can't believe I got this much couch money to invest in real estate?
Yeah, I mean, it's the number one reason that people say that they can't invest, but it's also many times the easiest problem to solve, the easiest obstacle to overcome when we get to sit down and actually have a conversation with a potential client. And, Shively hit the nail right on the head there. Retirement accounts are a huge opportunity for you to, find the capital to be able to invest in rental properties. And it's not just because rental properties offer better return on investment or more consistency. The reason that I shout this from the rooftops that this is possible, that, our clients are doing this, passive income clients are doing this, that I do this, that Shively does this, is because if you just take out the better returns, more consistency that comes with single family rental property investing, and you just look at how overly dependent Americans are on the stock market for their retirement accounts, it's pretty much all people know how to do and can do most of the time. Just for the idea of just diversifying and not being overly dependent on the stock market, there's a big value that people are seeking the opportunity to move into a different and better asset class. So yes, retirement accounts are a huge opportunity for those folks to be able to find the capital. Most of you didn't know that you had the opportunity to do it, but that's what this call is about. It's about letting you know that you can, and then there's teams here to help you, navigate that process, which, can be scary if you don't have somebody holding your hand.
Yeah, man, makes a lot of sense. If you want to do a deep dive into it, go to chatwithjwb.com, jump in with experts. But let's get started, right? We talk about how do you put it to work? I know this was my case, right? Like many people have changed jobs in the past and have an old 401k, old IRA that they've just kind of had on cruise control for a while and haven't really tapped into, right? Is that what we're talking about here?
Yeah, I'll just go ahead and jump in here. Yeah. So let's kind of identify specifically some sources of capital within your retirement accounts that you may or may not know that you had access to. The first one that you brought up there, Pablo, is a great one. An old IRA. Many people think that when they leave their job, that the best thing to do is one of two things, either just to leave that IRA and roll it over into call it a traditional IRA with a traditional brokerage, or they just sometimes roll it back into their new employer 401k plan. And the challenge with that is you have this beautiful opportunity when you leave a job with a whole lot more flexibility that comes with what you do with your retirement account. You no longer now are getting a match from your previous employer. But at that moment, your old IRA or your old 401k can be rolled into owning real estate or private lending or some type of asset there. And you really don't have the restrictions or the holdbacks that you have if you're still currently employed and earning that and having that 401k with that provider. And specifically, if you're currently employed with that 401k and it's under your current employer, you still can access this. We'll talk about things that you can do here, but you're still getting your match. So you kind of have a little bit more restrictions when you leave your job and you have an old 401k or an old, IRA. That's time to sit down with a provider like JWB and say, okay, well, now I'm thinking about going into real estate. What do I do here? And it's a lot simpler at that moment right there.
Paul, you've helped many people do this, right? They find it, they know that they want to do it. What's the next step at that point when you're generally giving folks advice?
Yeah, I think the first step is helping people get over the fear. I think helping people understand and kind of naming it to taming it, right? Like name the fear of, oh, I didn't know I could do that. And that's, makes it queasy a little bit. And I'm moving your money and money's moving and things are happening and people are touching your retirement account. And it's like, oh, I thought I never could touch my retirement account. Well, if you do it the right way and follow the rules that the, SEC and IRS set them out, it's the same rules that I play by, that Greg plays by, that you play by, every American plays by the same set of rules, right? Problem is most people just don't ever read the rules. How many of you have sat and read the IRS tax code? Even on this call, how many people have you done? Yeah, right. So
I did it early on when people told me that I couldn't do it. I was like,
right.
I think there's something to that. Let me go and check it out. So I'm with you.
Yeah.
I did.
Actually go and read it, right? And so once you read the law, read the rules that are set out by the people who control the game, like, okay, well, they say I can do it. Here's exactly how I do that. And that's the education piece, right? And how I think we conquer fear and how we start to take action is we get some education in there, right? And JWB is phenomenal at this, right? Chatwithjwb.com is phenomenal. If you need that education piece, that's exactly why you jump on the horn and go to Chat with JWB. Talk with, amazing people like Danica and like your team who can teach you all of this on a one-on-one individual basis, right? Mm-hmm. Which is huge. And that's the customization piece that takes us to a whole nother level. But the basic education, the 30-second version, right, is you do exactly what Greg said. You've ID'd it, Pablo, you've ID'd an old 401k from a previous employer you're with for 4, 5, 6, 7 years, and you've amassed a decent chunk of money there, right? That's your money now, right? It's in your retirement account, but that's your money. You have the choice. Now, what you do is you make those election forms that are sent to you in the mail, right? Or these days in an email potentially, and you're going to get a choice. And you have to sign some paperwork to move it wherever you want. The default kind of normal American choice is to move it to your new employer, like Greg said. Well, that's the same exact process. You're literally moving it from old employers' plans. So 401ks are plans technically, right? You're moving it from their plan that their company has to the new company's plan. Well, your option is you can say, well, I want to move it basically to my own plan. I want to control this. I want to self-direct this. Because I'm an educated real estate investor that's been listening to Greg Cohen for the last 15 years on the Not Your Average Investor show. And I know how to do this, right? So you have the education. Well, wait a minute. I don't have to move it to my own employer, which most people think that's the only answer. The other answer is you can self-direct it, right? Now, in the self-directing, you have to follow the rules. And the rules are you can't touch it, right? Greg can't touch it. I can't touch it. You're moving it to basically a 401k bank, like a custodian, right? So instead of Charles Schwab, there's dozens and dozens and dozens, and there's nothing against Charles Schwab, by the way, right? I'm not picking on them, to be clear. There's dozens and dozens of other Charles Schwab-like companies that are self-directed companies. Now, what they are, think of them as a 401k bank. They hold your money in escrow, right? Like it should be. A 401k has to be handled separately with special rules. They do that for you, but they don't invest it for you. You get to choose where you invest it. And that's the education piece. Once you walk people through that, help them understand. They get on the phone with 3 or 4 self-directed custodians, right? They do their Google search. They talk to Greg's team. They figure out some good ones. And they say, okay, let me call 3 or 4 of these, make sure this is actually real. They get educated. All of a sudden, that fear goes away, right? That Twitter-pated stomach feeling goes away a little bit, right? That we all have. And if you don't, you're kind of lying to yourself probably because it's your money. You probably should have it, right? When you're dealing with your retirement money. And that education piece helps lead to action. Okay, I can self-direct. I know how to do it. Here's my options of companies to do it with. Okay, then exactly how do I invest it in real estate? Well, we can talk to you about that. You take title of the real estate in the name of that 401k, right? So there's specific details you need to follow. That's a little bit of the nitty-gritties, but that's the first thing you go through, Pablo, is I want to make sure we touch on that is a little bit of the content, the meat and potatoes. Hey, here's the source of capital, but then here's exactly how you do it. And those are the steps. I did it in 45 seconds. You might want to, or 3 minutes maybe, right? You might want to schedule a phone call with Danica or chat with jwb.com. And you might want to do that to help your specific action plan go about that. And that's a 4 to 6 week process to do that, right? To roll that over, right? But that's, I think, the biggest action I've taken notes. that's what you take notes on, is exactly that what we just talked about, right?
I love how simply and directly you broke down the meat and potatoes.
Why don't we take a little bit of a step away from retirement accounts and talk about what sources of capital people don't know that they have, call it in non-qualified funds outside of their retirement accounts and their personal assets bank accounts. What can we talk about there?
Yeah, I think the big thing is most people who have a significant or moderate to significant net worth have been told to find a good money manager, find a good financial planner, and start, build your brokerage account and start investing in the stock market. And I'm not saying that is a wrong piece of advice. I want to be abundantly clear. What I'm saying is most people don't take the time to look at that, exactly like you said earlier, Greg. Look at that compared to what your other alternatives are and potentially rethink your diversification pie, right? I am not, I have 95% of my money in real estate. I'm not an advocate of that necessarily for the average investor, and that's okay. But, I live and breathe real estate every single day. I am all in on real estate. I don't advise people to be all in on real estate 100%. I want them to have a balanced portfolio, but I think the reallocation of what that balance is very different for most people, right? And I think, Greg, that's where you're going with this, is take a look at those money managed accounts. And kind of secret side ninja tip, please take a look at the fees they're charging you on those accounts. Please just read that again, right? We go through your fine tooth comb docs on what your money manager is charging you and what investments they put you in. And if it's not just like a blank ETF that they don't charge fees on, then I would highly recommend you please, again, look at the fees they're charging you on that and throw that into the analysis as well too, right? I think that's the biggest one. And I think the other biggest one is the equity people have in their houses that they just don't really realize they can tap into, right?
Two great sources of capital.